Good to talk to you and appreciate your time. So, there's been a lot of, we can talk about a number of things, right? Paring down its holdings in Apple is one, but the cash hoard, $189 billion, and they're talking about probably $200 billion by the same time next year. That's a heck of a lot of cash to be sitting on. He was pretty clear, look, unless or until we find something good to buy, we're not going to touch that hoard. But I mean, investors are going to be going, well, look, in the meantime, why don't you give some of that money back to us?
Well, it's interesting. He does talk about, 5.4% yields from the Fed are quite attractive to be holding in the cash side. So you're getting very good yields. But he does talk about the opportunities he sees. The valuations are not as attractive as he would like. It's sort of quite interesting when he talked about reducing the Apple stake. He went on this whole tangent on taxes and how the fiscal situation of the U.S. means that tax rates are going to be going up in his view. And it seems like he's trying to lock in some of those gains. But I think it's quite interesting. When he bought Apple first back in 2016, it had a PE close to 12. It's grown its earnings substantially, but now it's a PE closer to 30. And we're talking in Squawk Box Asia. He's been buying a bunch of those Japanese companies, and even though he has gains of anywhere from 150 to 400% on some of these stocks, they still have a PE ratio of 12, which is where he was first on average for the 5 stocks. So they're still basically where he first started buying Apple. And so I think when he's hunting around of where can he put his cash, he'd like to put more cash to work in Japan, but it's just not as big of a size. But for people who are buying locally, I do think there's some good values over there in Japan more so than in the U.S.
Yeah, that Japan move, right? He's basically bought himself a stake or a big chunk of exposure to Japan's economy, because these trading houses, these trading giants, they've got tentacles all over the place, right? And he's scaled into that position. We were talking about how he's just under 10%, 9.9% on all of those trading houses, and likely to want to stay there. You point out that what is underappreciated is this was a really smart move, because what he did was he issued Japanese yen bonds because he was convinced, or he was able to convince creditors to give him even better rates than what was already basically net zero in Japan. So that was a pretty sort of prescient move. What happens, though, now that the yen is starting to go back up?
Well, this was a very interesting comment that he wrote in his annual letter, and he talks about how he has no idea what these currencies are going to do. And he says he doesn't think he could hire anybody who knows what the currencies are going to do. So he's using the yen issuance so that he doesn't take any of the risk. You see these day-to-day huge volatility swings. He doesn't want any of that. He thinks the stocks are cheap and they're good buys. And so he's insulated himself from the currency moves because, hey, maybe people think the currency is cheap, but maybe there's all sorts of other factors like the interest rate differentials that say it continues weakening. And so, he's just not playing that game, and issuing the yen bond was a great source of financing. I think more U.S. investors should be doing the same and insulating themselves from this additional risk. And, hey, they get 5% carry on top because of that relative interest rate differential as well.